have a conversation first. So the structure behind these stage chats is to effectively give you a little bit of a hypnosis on what's going on right now in the charts and what we are looking to expect. Okay. Then I'll be going over a couple of concepts. All right. So for the new guys, and today's topic is that we're going to be covering is understanding what candlestick formations or the behavior of candlesticks. How can we understand based on their behavior? How can we know or look forward to seeing where price could go next? Okay, so what I'd like you to do is I'd like you to pull up Bitcoin on the 1 hour time frame. Okay, on MT4 or TradingView, either or. Just let me know when you've done that so that we can start the concept. Right now I'm recording it, so don't worry. Wonderful. Okay, then here we go. So Sunday, Monday, the false move week beginning. Okay, we had a spike to the high. Now this thing about the Monday, the false move week beginning, is taken from the concept of wonderful. That's good, Perun. The false move. Now some of the new guys, the false move itself is something that's taken from the actual strategy itself. Now in this hybrid system, okay, for the new guys, I've taken two schools of thought, and one of them is the PVSRA model, which is your candlesticks, okay, and the green and red candlesticks and the moving averages. That's from one school of thought. And the other school of thought is Steve Murray's market maker method. Now, the difference between the strategies themselves is this. Steve Murray market maker method implies understanding the importance of timing. All right. Now, when I say timing, it's not necessarily meaning timing in the trade, but the time that price is behaving in and around certain sessions. Okay. Now, the PVSRA method talks about understanding the importance of the candlesticks and how the market makers behave around key notable areas. Okay. Now, I can guarantee to you something. All right. I'm just going to go a bit off topic here for the guys that have been here for a while. How many of you, okay, actually use exo charts? Can you just put one or trade? No, exo charts. Just tell me how many of you use exo charts. No. Wonderful. Cool. Stay there. That's fine. Don't need to talk about it. Perfect. All right then. So this is what I'd like you guys to do. Okay. In with the PVSRA indicators themselves, in the settings, remember I'm recording this. In the settings themselves, there is something called it will present it too close on the chart, but here is a little trick for you. All right. On the chart, get a trend line and draw it across the screen at every single whole number. Okay, so wherever price is right now, so we can see that Bitcoin is near the 33,000 mark. Okay, what I'd like you to do is to get a trend line and draw a line across the 33,000 zone. Okay, so if you can do that for me right now, that'll be great. So this is how it would look on MT4. I'm going to send that chart to you guys right now. This is how I want you to have it. Right, okay. Here we go. So I've attached a chart on there. So the green line at the bottom, okay, you can see that it's the whole number. All right. Now pay close attention to this zone. All right. And the importance of the whole numbers themselves. Okay. What's going on here, John? Okay, are we there? Have we got the chart? Are we done? Okay, cool. All right, so this is going to be in relation to what I'm talking about with regards to the candlesticks. All right. So we've noticed with Bitcoin, every time she comes below the 33,000 mark, what is it that we see? Vectors. Okay, red vectors. Consolidation. Yeah, price slices to these levels. Notable volume comes in. Pullbacks. Okay, great. Stopping volume. Perfect. Okay then. Right. Now for the new guys. The concept behind the whole numbers, okay, is very important for us. Why? Because whole numbers in the chart act as psychological barriers or psychological entry points or exit points. This is where the market maker works his money. All right. Let's go into a shop, for example. When you walk into any store, the money that they want you to spend is always somewhat close to the total amount. For example, $24.99, $15.99, $19.99. It's never the full amount because in your mind, psychologically, they impress you by saying it's not £24, it's actually $24.99. So you don't deem it to be as expensive. Okay. However, when it's money that they want to knock off the price, it's in bold numbers. Okay, it's in bold round numbers. £100 off, £50 off, £1,000 off. That is very impressionable on the mind. The same concept applies in the markets. So in the markets themselves, people place orders at whole numbers and half numbers. Why? Because it's easy to manage and the market maker can see those orders. All right. So when you're looking at the chart on the 33,000 mark, before it hit the 33,000, if you look at where it was before that, okay, which was the 34,000 mark, all right, you can see that notable volume comes in yet again at the 34,000 mark. And when I say the notable volume, you can see the big red vector candle that comes in through on the 7th of July. You can see how price broke through that zone aggressively. Yeah. Can you tell me if you see that? Yeah, wonderful. How can you not? Cryptic. There is so much information that can be that can be taken from this. It's your interpretation of it. Let's be honest now. How many of you really paid any attention to the concept of the whole numbers and the half numbers? Other than the aspect of, oh, Bitcoin should be 17,000, Bitcoin's going to get to 100,000. You know, be honest. If you have, brilliant. If you haven't, state it. Not enough. Yeah, okay. Wonderful. That's fine. So, we know that the market maker does something at these points because that's where the liquidity is at. Now remember, wherever that liquidity is, okay, market maker's going to send price to that zone to induce something to happen. So you can imagine how many people, when price was at above the 34k mark, people were anticipating a retrace back. Do you know how many limit orders were probably sat at 34,000? And then when those limit orders were going to be realized, okay, the market maker did what? He crashed price all the way down and hit all of their losses, hit all their liquidation points. And he used those liquidations to build his longs because he knows that people put orders at whole numbers, right? You think institutional traders are going to be coming to the chart and saying, oh, Bitcoin is at 33,164. We need to put loads of money at that point because that is a very important zone. No, it's the small money that does that. It's your average Joe who opens a trade and doesn't give two shits about what the price is because he looks at the candlestick and he just bases it off what he expects it to do. He doesn't care about the entry. A new trader will always try and assume that he will always try and get in. He will make his own analysis and he will see a pattern in his mind. He will try and impress that pattern on the chart by drawing lines around it. Okay. And he will just open a trade and say, right, I'm going to try and get in before it actually develops into a pattern. So he convinces himself that the entry that he makes is before his pattern plays out, which is why new traders get caught up in positions that aren't favorable because they don't actually allow or wait for confirmation for their analysis to play out. Okay. So here we go. Notable volume coming in at the lows. They did this twice. So at the 34 mark and then at the 33 mark. All right. Every time we come below this point, we seem to get a rejection from it. All right. So if you look at the 7th, they came down below the 34 mark. They came down below the 33 mark. All right. And price pulls away from it. They did it again. 34,000. Look at last night's behavior. All right. Not last night, the night before. Look at what they did. I'm going to take a screenshot of it. $34K zone. And then 33K zone. Funny, isn't it? Wait there. Get this over to you guys. I'll answer questions in a sec, guys. Okay, so look at the two images. All right. Top image shows you price and notable volume coming in on the 34K mark. And then again, 33K mark. What is that telling us? Okay. It's telling us that the market maker is favoring lower prices at that point so that he can get his positions filled lower so that when he comes back later, he effectively has the best fill when he breaks out through that zone. So every time it comes through the zone, all right, you can see notable volume here. Remember, I'm recording. You can see how notable volume steps in on this candle right here. Drop down to the 15-minute time frame, guys. All right. And you will see to the pin at the 33 mark. Where is it? Here we go. This will probably, most likely grab your attention with the concept I'm discussing right here. Right. Have a look at this. Look at the image that I've just actually done here. Guys, this is not ironic. Okay, light shot. What's that? Because that'll make life so much easier for me. Realizing your return on longs by taking out all the guys who went short. Because as price is rising, guys' liquidation points are being hit. So they're feeding the liquidations to their longs. Okay? How many of you guys that are new in this Patreon today, okay, how many of you guys understand the concept of price rising that the market makers are selling, and when price is dropping that the market makers are buying? Type 1 if you understand that, 2 if you don't. Wonderful. That is good. That's really good. Wonderful. Wonderful, wonderful. Aiden, what are you trying to find, my friend? Because this stage chat doesn't share any screens. It's just a voice. Yeah? Wonderful. Okay then, cool. From these these images that I've shared with you guys, print them out. Make them a point of reference, because there's going to come a time when price is going to be at one of these zones and you're going to have to make a decision. Look at where price is right now. Okay? So pull up Bitcoin on the 15-minute time frame. All right? We're going to have another screenshot. I'm going to draw out what we can see on the 15-minute time frame. Okay? Now, frankly, this to me looks like the perfect W. All right? Just going to get that up for you guys. Okay then. Here we go. Right. Oh my God. Oh, really? Hold on a second. So shift, Winky, save, draw. Oh my days. Dude, that is just made life so much easier for me. And then where do I put it? How'd you do that? And then put that there. Oh my God. Oh my God. Bro, that was fire. That just made life so much easier for me. 10 points to you, man. 10 points. Like, really, 10 points for you. I've been using this. Oh, man. Anyways, okay. So, looking at that image right there, guys, all right? Let's break this down, all right? We do have the criteria of a W formation. All right. Looking at the RSI itself, as they are coming to the lows, divergence is coming into play. Now, for all of you guys that may be new here, do we understand the concept of divergence? All right. The idea behind divergence is when price is going in one direction, the RSI indicator itself is going in the opposite. So it implies that something is changing. So what's stopping? Like pressure to the downside. All right. So, but the reason it's stopping is because as they make lower lows, price is closing higher. All right? That's what's important about that. So, this is what we need to understand. We have had yet again 3 hits to the low, the 3 vector candles to the low. All right? Now, why are these candles to the low important? Can I show a screenshot of divergence? Yes, I can. Okay, here we go. Let me just use my new trusty method of trying to do a screenshot. What the hell? Here we go. So here is divergence at its best. So it's a little bit difficult, not difficult, but let me show it to you right here. All right then, so the image that I've attached right here, okay, you can see price is coming down, but if you look at the RSI, all right, you can see it's outside the volatility band as it drops. Then as it continues to drop, the RSI, which is the green line, starts to come back into the market base, which is the yellow line. And it starts to stabilize. As it makes a lower low, okay, price is within the volatility band. So that tells me that volatility to the downside is starting to slow down. All right. You can see the RSI itself, the 2 volatility bands. Look at how contracted they are. They are compressed. Now we're expecting a bounce away. All right. Whenever you see that contraction in an RSI, it tells you that something's going to change. All right. Yep, for the new guys, the blue lines are volatility bands. There is a video in the channel, and someone's just posted it, understanding the hybrid method. All right, there you go, helping each other. That's brilliant, guys. That's brilliant. Yeah, but guys, let me tell you something now. Okay. Don't dive too much into divergence. Divergence is something that takes, ideally, it works on the higher time frames, okay? But when you're on the smaller time frames, right, it doesn't really last that long. And if I was to have 100 checklist of where the RSI in terms of importance would come, it would be the 99th thing that I consider. All right. If you notice when I'm breaking down what price is doing, I say to you, yeah, price has done this. We've got this vector candle. We've got this moving average and the RSI is pointing upwards. It would always be the final thing that I look at. Okay. Right. So in light of the pattern that we're looking at right now, all right, 3 is the magic number. You've got 3 vector candles appearing at the lows. Now, what we need to pay attention to is this. Try and pick points where you think psychologically retail traders are stepping in. All right, and I will show you these points right now. Ah, for God's sake, what is that? That's 1 point there, 1 point here, 1 point here. Okay then. So here is the point where traders are stepping in psychologically. What the hell is Alt 4? What does Alt 4 mean? It closes all. I didn't install Lightshot. No. Oh, you want me to press Alt 4 to close what? Do you want me to? Should we do it after Alt 4?
Oh my Christ! Oh my Christ! Stop!
I'm fucking with you all, man. Of course, I ain't gonna press
Okay,
Alt
thank
4.
God. Stop.
Jesus Christ! Give me a second.
Listen, Alt F4 brings up your NVIDIA card. Then you could take a screenshot from that instead of having to do all these points. Is what they're trying to tell you. You have an NVIDIA card. We can work on that after the stage chat.
Okay, then cool. That is awesome.
All right, I got you, bro.
Nice one, bro. Thank you.
No worries.
Okay, so Alt 4 it is then. Right, here we go. Okay then. The big brother. TR rolling. I like that. TR rolling. Okay then, cool. So, have you got the image that I've attached? I'm going to share it one more time because... Alright then. Nah. It's all good. Alright then. The image that I've attached right now, guys, pay attention to it. We've got 3 blue arrows on there. Can you guys, just to yourselves now, can you work out realistically and also psychologically, can you try and understand why the market maker would come to these points in the chart? You know, how would you how, if you were a retail trader that was going short, right? What point would you decide to go short at? Yeah. Yeah, relax. Yeah, to be honest with you, yeah, you need a live account, but you don't necessarily have to deposit. You don't have to deposit on a live account. The demo account just gives you inflated, it doesn't give you the correct spreads or anything. It's just, demo accounts ideally are set for people that just want to try the platform out. The real account is what's going to give you the correct pricing and what have you. If you want to trade, it's a different story, but you don't have to deposit any money to open a real account. Okay, so looking at what your comments are, the bottom of the red. Breaking, yeah. Smooth, yeah. Yeah. Breaking, not going higher, 50 EMA price is lower. Okay, cool. These points in the chart, guys, with these, for considering that it's these blue arrows, okay, just, this is where hidden confluences appear. Okay, now I'm going to be going into a little bit of technical stuff right now. Okay, and these are the hidden confluences that are going to help you understand how to effectively determine whether a pattern's going to play out or not. All right, because the W's and the M formations, they always appear. That is true. And I've said to you before, if you want to get a clear representation of what price is doing, pull up the line chart. All right. The line chart will always give you a clear view of what's going on. I remember in one of the streams quite a while back, literally did all our analysis based off the line chart itself. And for all the new people that were coming in, if you're struggling to see M's and W's, pull up the line chart on the 1 hour time frame and then go on to the 15-minute time frame. Okay. That's what's going to help you visually understand whether a W or an M is going to play out correctly or not. Okay. Now, here are the hidden confluences. All right. The first hidden confluence is the big red vector candle that triggers the first leg of the W formation. Okay. Which is at the first blue arrow. All right. Try and use that chart, guys. All right. The last image that I've posted, try and use it. All right. I'm going to post it one more time for it if it gets lost. All right. So the first blue arrow talks about or shows you the vector candle coming in, which is the market maker creating climatic impressions to the retail trader to get in short. All right. At the same token, he's taking out people's money from previous positions. Remember, he got the guys to go long. All right. If you zoom out, granted, that big red vector candle is recovering a previous vector zone. All right. Here's an example. Yesterday, this is what we spoke about in the Patreon update. I gave you guys, the market makers, I gave you an update on the previous zone. All right. So let me attach that to the screen right now and you will see what I'm talking about. So this was yesterday's update. This was the zone. Did you get that? Are we good with that? Yep. Wonderful. Okay. So, this is what's important, all right? Looking at this previous zone itself, all right? We're able to understand something. What the fuck? Let's get rid of that. When you see those climatic behaviors appearing at those zones, and then you look left and you can see the vector candles, if there are no vector candles nearby, then there's a good chance this is the point where they stop. What is it that I say to you every time hits a projection zone? What happens? Pullback. Exactly. Pullback, pullback. Retrace. Well, exactly as projected, not predicted. We don't predict anything. It's projection. Yeah? Should be no surprise, of course. Why? What is it that we need to understand? Why do they pull back from that point? What's actually happened at that point? Correct. They trigger the guys to go in short. And they use their liquidity to open the positions that they favor to the downside by taking advantage of the guys who got liquidated earlier on by going long on those two green vector candles. So let me bring that up for you. Okay. Look at this. See those green vector candles on the image I've attached? Right? Look at the red vector candle. Now, if you really want to play games, just look at where that green vector candle starts and look at where the red vector candle finishes. All right? Recovers near enough the whole wick and then back up. Okay? Now, when we get to positions like this in the chart, guys, all right, we then have the first clue. What did they do it? Where did they do it? Sorry. They did it at the 33 point. So notable volume comes in below the key notable area, which is the 33,000. They trigger all the guys to go short and they take the liquidation points from the guys who went long previously because they just don't know how to pay themselves. All right. Whilst all that is happening, they're hitting people's limits to go long. Okay. And then they're hitting everybody else's shorts. They have got an mass amount of liquidity to really manipulate their price in their favor. All right. Then the next part, when price comes straight back up and it hits the 50, what do you think that's doing? That's hitting people's liquidation points that went short. Now, in order to induce more liquidity, because the market maker has actually pushed price down in the previous move and got traders committed and trapped. Now, there are traders that are sitting in positions with wide liquidation points, which is why you always tend to see at the midpoint of a W formation, price always ends up spiking up and down, and it's trying to take people's orders in and around that zone. But remember, the general consensus is that Bitcoin is dropping, which is what the first leg does. The first leg of a W formation creates the illusion that price is coming to a drop. You know, it's getting ready to drop down further, which is what leads us on to the next part of the second. From the second arrow, we're now going on to the third arrow, which is another vector candle that appears at the lows, but it doesn't take out the first leg. All right. Now, the second leg of a W formation gives you all the information that you need to determine whether or not price is going to come away from that point. Okay. Now, this is what you need to try and put in your minds here. You need to ask yourself, how much, or should I say, how many vector candles on the first leg? How much influence has the market maker created to the retail trader to believe that price is going to come down? So this is where you want to start looking for more than 2 vector candles. The more vector candles you see, the better. All right. What you're looking for is not more vector candles means that it's going to turn and go back up. Not necessarily, because we could get one long vector candle and then price goes up and makes a massive run to the upside. All right. If you see a concession of vector candles appearing on the first leg of the W formation, all right, you know that the market maker is stepping in and controlling the move to the downside by creating climatic behavior on the final bit, which is what the blue first arrow is, the final push to the downside. Isn't it bizarre how that big push to the downside didn't allow price to go any further? They just kept it slightly below the 33,000 mark, and then they came straight back up. Yeah? Can you guys hear me, yeah? Are we all good for sound? Wonderful. Okay then. Right. So, the second leg of the W formation itself is going to help us understand the market maker's intention as to whether or not he's going to come out of this zone. Now, what you want to see is you want to see the market maker come away from this point, because remember, the W formation is a psychological pattern. It's the market maker keeping traders committed into this zone, because the more he keeps traders to the downside, committed to the downside, the better the chance he has to get his longs closed at a higher price. Why? Because all the people that have gone short have set liquidation points above their entry. So the market maker can already see where there is dead money for him to go and take. Remember, he's induced them to believe that price is dropping. All right. Now, the crazy thing about liquidation points, especially in cryptocurrency, is this. It acts as a ultimatum stop loss. It's a margin call stop loss, and that is terrible. You know, if you don't, people tend to make the decisions on their trading based on their liquidation point. Okay, so you're effectively risk failure. All right, come away from that concept. Come away from the idea of risk of ruin. The risk of ruin, okay, should be something in the back of your mind where if you behave erratically at your trading, the chances of you coming to ruin your account based on a number of trades should be after a succession of trades. So, for example, if you're risking too much money, right, it's going to take you probably 10 trades to blow your account. All right. Now, if you reduce that risk of ruin, all right, you are improving your risk to ruin ratio by making it a lower percentage. So if you can try and keep a risk to ruin percentage of less than 10%, all right, you are trading correctly in light of risk management. If you're a trader that likes to get a lot of leverage, your risk to ruin is very high. In other words, there's probably an 80% chance that price is going to hit your liquidation point, which is why whenever you make leverage trades, your liquidation point is so close to your price. All right, it's designed to get triggered because that is where all the money in your margin gets taken. All right. So the W formation itself is a psychological pattern, and it tests people's commitment to their trades. Now, people that are committed to their trades in light of a W formation, all right, when the price is looking like it's going to come down, external forces are coming into play. You're seeing Bitcoin at 32,000. Well, what is it at now? 33,225. People are throwing comments. Bitcoin going down to here, going down to 17, 10, whatever. It doesn't matter. If there's one thing I tell you new guys, it's this. In this stream, in this lesson, and the concept behind all of what we talk about, we don't care about price. We only pay attention to price when the market maker starts to encourage long vector candles, because what he's doing is he's exploiting the people that do pay attention to price. He exploits them so that he can get his orders filled and encourage something to happen. Retail traders that look at price, all right, they base their decisions based off what they've seen on YouTube, or if they've read an article, or if an authority in cryptocurrency says something, right? We only care about the candlesticks that appear at around these points. Excuse me. All right. Are we cool? Are we all on the same page? Hi, Anna. How you doing? Okay. Makes sense. Good. Cool. All right then. So where does that leave us right now with Bitcoin? So what we've just done in the past few moments, guys, is we've broken down what to expect from a W formation. All right. So let's start again. We've got the first move to the downside. We can see the vector candles. We've got stopping volume on the green vector. Then a red vector candle comes in. Another stopping volume candle comes in. Vector comes into the downside, stabilizes price, cuts below the 33,000 mark, and comes straight back towards the 50 EMA. Market makers have now got the retail trader trapped because he went short and he took out their liquidation points. At the same time, he realized a bit of a return on his longs. The market maker needs to realize returns at all times possible, because that's how he manages to move price in the direction that he desires. All right. By the time price comes back to the 50 EMA, which is the second arrow, price then pulls away. And as it's pulling away, it's installing in the retail trader's mind that now is a good time to either add to a position to go short, or to hold his existing position that he's in red in. All right. So now from fear comes greed. Market maker gives the retail trader one last attempt at going to the downside. It comes and tests the daily open, which is this purple line right here, and then moves away from the point quite aggressively. Now the retail trader is stuck. All right. Now because he's stuck and his liquidation point is so close, he's now got a problem. He's either got to add more margin to protect his position, or he's just going to simply say, you know what, forget it. I'm just going to hope that it doesn't hit. Well, unfortunately, the market maker doesn't go by hope. Retail traders hope. Market maker knows exactly where he's going. Now, market maker needs to come out of this zone where this W formation is on the 15-minute time frame. He needs to get out. Why? Because if he stays too long in this zone, he's then going to get a plethora of orders coming in, which he will be obliged to fulfill. Now, if he gets loads of shorts coming in at this point, all right, he's then going to have to make sure that those shorts get filled, because he can't miss out on placing orders. He's the liquidity provider. So then that means he would then have to send price down lower and make another third hit to the downside, because everyone still thinks that price is going to drop. All right. What the market maker does is he gets people committed to price coming down in one direction, and then by him coming back up aggressively, which on the second leg of the W formation is price shifting out of the zone. All right. He's able to throw those people off. and get them to change direction, and then he can start his process again, which is to build longs as price is rising. Sorry, build shorts as price is rising. Okay? How you doing, my friend? Yeah, Adam, it's the transformation into fear and greed, because that's exactly what is happening on every single pattern. People make the mistake of looking at a pattern and basing it as a pattern, and then they go into the charts and they try to just look for this exact pattern. Well, the validity of the pattern itself doesn't have any, how can I put it? It doesn't really have any strength if you see it happening all the time. Do you know what I mean? What's going on here? I'm just going through a previous... Oh, here we go. I need to change that. There we go. This is my... I'm talking on the chart right now. This is my long entry with dollar yen. See notable volume coming in. It's another opportunity for me to add a few more positions. Got some nice spike to the downside. London session setting up the UK. Setting up for the New York session. So if I see a red vector candle at this point, no vector candle coming down towards the pivot point and the psychological high testing that point, I'm expecting a bounce away from that zone. So I'll get into Forex in a sec, guys. All right. And I'm just waiting to take advantage of potentially another entry at this point around the 110-300 zone. Okay. So I'll send an image of that for you right now, so that you guys can see that. Here we go. There's the positions right now. So I'm just waiting to see if this candle is going to finish as a vector or not. All right, so it's now another building opportunity for me. If you look at the top, the couple of positions above at the highs right there, okay, I'm getting ready to add potentially another movement to the upside. I'm looking at gold as well at the same time. Gold is now starting to go down, all right? So this is the false move, in my opinion, on dollar yen. The false move on dollar yen and the move to the downside on gold is effectively setting up traders to believe that one thing is happening, all right, when really what's happening is something else sinister is happening, so they could actually move it back up. Okay. Right, let me go back to Bitcoin. All right. So, let me see. Tino, a dumb question. What is liquidity for me? Please be as precise as possible. It's not a dumb question. Okay. Liquidity to me, guys, it is a great question. All right. Liquidity to me is when the market maker is exploiting the retail trader. All right. Because the only way that the market maker can induce people to do something, okay, and get positions filled is when I see a vector candle, which to me is liquidity. All right. Now, looking on MT4, you can see the red vector candle coming to the downside. The only way that a red vector candle comes in the light of MT4 is if orders are being filled, price is changing hands, okay? That there is a liquidity pool for me. That's a point in the chart that I need to pay attention to, all right? Now, on MT4, the decisions that I make off the vector candles are based on how often price changes in and around a certain zone. So when a vector candle appears on MT4, it's not necessarily volume, it's just the amount of times price changes at a point in time. And when it changes aggressively and you see a vector candle, it means that orders have been hit at that point. Now, I can't see those orders because Forex, the volume is just all over the place and you'll never get a true representation of volume, all right? But all you can base it off is how often is there interest at that point, and that's based on the tick chart. If price is changing on the tick chart aggressively and at speed, it's because there's liquidity being taken, stolen, taken, filled, hit, and that's where the vector candle comes in. All right. So where do we see Bitcoin moving from this point? Well, let's consider the following. All right. Right now, Bitcoin is trading below the psychological low. All right. And every time it comes below this point or in this zone, it likes to stabilize. Do you guys remember last week when Bitcoin was holding in and around its psychological zone? All right. And then we had that one big move up to the upside. Yeah. The same thing is happening right now. They are holding above the daily open, which is at this W formation. If Bitcoin holds this point, we should then see the psychological high being taken. Right now, we're testing the M2 pivot point. All right. If the M2 pivot holds, we will be projecting towards the M4 projection point, which takes us to 34,896, which is the range daily high. All right. If demand and supply is an illusion, what time is it? Right, it's 10 to 11. Okay. If demand and supply is an illusion, how does price change on the markets? What are the forces that make the price change? Interest. Okay. It's the way the market maker induces traders to believe one thing. So let's look at it like this. The retail trader does what? When he comes into trading, he starts to focus on how to trade, or is there an indicator out there that makes life easier for me so that I can just open and close a position? There are thousands of indicators out there that are designed to try and exploit this market. Okay. Like in the casino, for example, look at how many strategies there are to card counting, right, with blackjack. You know, there's a strategy with, with roulette, the martingale system, which you can apply everywhere. All right. The way you actually determine supply and demand. See, the problem is, I had this conversation with Adam in the last chat, which was really good. The concept of supply and demand is different in retail as opposed to what it is in the markets. Because supply and demand is on the principle of a tangible asset, something that can be exchanged for a certain amount of money. There is a fair exchange. If you have 5 green jumpers, 5 yellow jumpers, and 5 blue jumpers, and then you start trading, and at the end of your trading day, you notice you've got 1 green jumper, 3 yellow jumpers, and 3 red jumpers, for example, you will know that supply and demand would dictate that you need to get more green jumpers in, because there is a demand there, and there's not that much of a supply left. So that gives you the opportunity to increase price, or, just do something about how you can market more people to buy more green jumpers. Now, when you're coming to the charts themselves, the concept of supply and demand, all right, there will always be a supply and there will always be a demand, because the market maker who comes in, he is the liquidity. He's the guy that allows you to buy and sell, because every time you buy, he gives you the opposite of your contract, which is what he does is sell to you. Okay. Okay, then, here's Ape Asylum. Here we go, right? What is your thoughts on this widespread idea on Twitter right now about a volatility squeeze? Lots of people are expecting a big move soon because the Bollinger Bands are very tight. And how does that relate to the market maker intentions? Well, here's an example. There's thousands and thousands of people literally toying with the idea that the volatility bands are creating this volatility squeeze, okay? Now, granted, what you need to try and pay attention to is the idea that when these volatility bands expand, all right, what's going to happen beforehand? All right, it's like this. When you trade non-farm payrolls, okay, here's an example. This is what I'm going to tell you guys to be aware of, okay? Where are we? Gold. Here we go. Let me just get this up right now. So this is what happened on gold. You see that action right there? This is what happened on gold. They spiked price to the low and then they shifted it back up. Okay? Now people are talking about the volatility squeeze okay, whether it's going to be favorable to the upside or to the downside. This is what they're waiting for. The market maker knows that people are looking at this, so he's going to try and build his positions the best way he can, okay? So this is what we need to be aware of. When people start putting out videos about all the volatility band has expanded, Bitcoin's going to make a move up, wait. Do not do anything, because the guys that are feeding that move, okay, are the retail traders stepping in. Market maker might spike price up or spike price down. Then you will see his intention. All right. Getting everybody to talk about the volatility band squeeze. OK, can you imagine how much liquidity the market maker is able to get filled on people believing that Bitcoin's going to rise? We'll get one more stab to the downside and then move up, or we'll get a move to the upside, spike down, throw traders off, take their liquidity, and then make the move to the upside. That's what we need to be aware of. All right. Now, wherever Bitcoin is right now, okay, wait, I need to try and see if I can add to a couple of my positions. Might be able to add. Right, okay. Looking at where Bitcoin is right now, yes, she's broken above the psychological low. Okay, we need to wait and see if she can hold that. We're not out the woods yet. Price needs to break above the 200 EMA on the 15-minute time frame, okay, which is the 50 EMA on the hourly. So there's no cigars yet. Remember, when price is in the psychological zones, do not base any entries. Be careful. Are we back? Can you hear me? Yeah. Dollar yen is recovering that vector. Yeah, we've got a red vector candle right now on dollar yen. Where are we? 1 minute until a new hour candle. So this could be an opportunity for me to add positions right now. All right. That's what's really good about this. We've come to the pivot point. We've hit the psychological high. We got 1 more minute until a new hour candle starts. Okay. What great time to add more positions below what? The 110 500 zone. 110 300. All these little zones in the chart. Really important zone. Okay. Here we go. New 1 hour candle. What's Bitcoin going to do? Bitcoin's got another few more minutes until it actually shows it. We could actually... Price needs to break above the pivot and the 50 EMA on the 1 hour time frame. It needs to do that before there's traction towards the upside. If price gets caught in between the psychological areas, it's a tricky place to trade. And remember, what does price do when it wants to come away from these psychological points? It wants to break out on notable volume. Okay? So here we go. Bitcoin's moving right now. Ethereum, I'm bringing up Ethereum as well. Look at the green vector candle on Ethereum. All right. Big movement to the upside on Ethereum. Very important. Got the projection point for Ethereum right here, guys. This plays out. Happy days. That's our projection point on Ethereum. Right there. Below the quarter number, let me have a look at dollar yen. Here we go. New vector candle, new 15-minute candle coming into play. Is this going to be the recovery of this zone? Hit the quarter mark. The quarter zones are important as well, guys. It's just another opportunity for them to really move price about. Bitcoin has now turned into a vector candle, guys, but look at it. Look at what it's doing. It's pulling back now. Yeah, it's pulling back. Drop down a time frame on, drop down to the 5-minute time frame. Okay, and what do you see? You see a vector candle on the 5-minute time frame, which hasn't been recovered at all. All right, so we've got to be careful. Imagine hundreds of guys are coming into the charts right now saying, oh, look, Bitcoin's here, Bitcoin's here. It may come back down to that point to retest the daily open. It's hit the daily open once. It's hit it twice. It's hit it a third time. All right, well, I'm not going to count the daily open at the start, okay, because it didn't really take long to consolidate down to it. But the two main hits of the daily open were done the third of the way into the Asian session, and then coming out of the Asian session, initiating a stop hunt low and then a rise out of the zone. So we've got to be careful. 5-minute time frame. Have a look at it. I'm going to bring it up for you right now. There it is. Bitcoin on the 5-minute time frame. Keep an eye out for that. Here we go. Dollar yen's vector candle recovery. It's now an opportunity for me to place an entry. So I've placed a couple of entries right there. This is not financial advice, guys. This is just me building a position. All right. I've got a longer term perspective on dollar yen. How do you mentally prepare? You've got to remember, Tony, I'm looking at this like a hawk. I am continuously paying attention to what they're doing with price. Now, I've been staring at dollar yen for the best part of nearly, well, it's been, 7 years I've been trading this bad boy. I stuck with her for 7 years. It's coming up to 7 years now. All right. I know the levels of dollar yen. Where she's been right now at the 110.250, she's been before, and I was trading it at that zone. And these market makers do have those points of interest in the chart. All right, they do look at these zones. How do we determine if the vector has been recovered or not? I see red vectors on the left and think the green is to recover it. Okay, then. The green does recover the green recovers the red, and then the red recovers the green. All right, this is what we're waiting for with Bitcoin. We're waiting to see if this little spike to the upside, okay, is going to actually come back down to test the daily open. I'm expecting Bitcoin to test the daily open. All right, one more time. See, looking at Ethereum, all right, she's broken out, but now there's not that much of a confirmation. So what we may get is price breaking out right now, trapping the retail traders to go long, bring price back down to get the liquidation hit for the retail traders who are going long, build more longs at lower prices, and then make a move. Okay? So this is what could be happening right now, guys, which is why I say to you, if you're going to scalp, then you scalp on the development of a vector candle. You're going to see the movement happen. So there are two instances that you can make trades. You can make trades as the candle is developing. Okay, so right now you can see the 15-minute time frame shows a vector candle. Drop down to the 5-minute time frame on MT4 on Ethereum. Okay, and you can see another build-up of vector candles. If you were to enter on the first vector candle appearing, okay, you would have realized a return. All right, but we are coming towards another 10 more minutes until the final close of this current vector candle on the 15-minute time frame. So ideally you want to be in and out, because the next 15 minutes could see the recovery of the green vector candle on the 15-minute time frame. Okay, so we've got to proceed with caution. See, right now you can see that that candle right there is not actually showing me strength. There's no confirmation that it's a clear break to the upside, because now look at what Ethereum's doing. It's coming down now. All right, you can see that they're stabilizing at this point. It looks like a bit of a fake move. Now, of course, we want it to go higher because we do have a projection zone which sits at the psychological low. But maybe they're just trapping traders to believe that it's now going up and then bring it down a little bit more and then make the move. The one thing that we do need to pay attention to, guys, is the fact that the Asian session itself is very small. So they contained price in this zone. So this could be a manipulative move. On trading, on IC markets, the fees are so cheap. All right. They are so cheap. The spread is absolutely... See, if you open a trade on IC markets on crypto, as long as your position is in a profit, because you're paying a spread, all right, as long as your price is in a positive, the spread is covered, so you don't have to worry about any fees. Now, in Forex, it's different. I pay a commission, a set commission on a trade. So they call it a round trip, which means when I buy and I sell, I pay one price. Okay, so depending on my lot size, okay, I can pay up to £10 to open and close a trade, just £10. All right. But when I close my trade and I'm in profit on that trade, okay, that £10 is nothing. All right. Yeah, the margin is huge. All right. Okay, guys, listen. I'm going to end the stage, okay, for this session now. I'm going to stop recording. I'm going to get this video over to the guys for the Patreon so that they've got it to watch. All right. But I believe we've covered a lot of stuff on this stage chat right now, guys. I'm really impressed with what we've done so far. Yep, I'm going to upload it onto the Patreon. I'm going to record it. Sorry, I'm going to get it buffered, get everything sorted. But the next stage session will be at around 12:15. Well, it's scheduled for 12:30, just before the New York Open, to have a look at what's going on with price. Okay, so yeah, I'm loving that. I like that you guys are liking the format. Okay, so absorb this information. Oh, there's no relaxing. Oh no, there's so much. I'm doing these segments so that I get more time to do other things behind the scenes. Okay, I'll tell you when it gets frustrating. It's when you spend loads of time in the stage, you know, because that's what I love to do. I love to spend time with you guys. Okay, I just like sitting here pattern watching the charts, because screen time is such a brilliant thing to get in your, you know, to do. But I need you guys to absorb it as well. So come away, reflect, make your own decisions, reflect on what you think should happen, what could happen, pull out your own projections. Okay. And then whilst you guys are doing that, I'm doing other things behind the scenes, so that when I'm ready for the next session, I'm ready to hit you with something else and base that information on real time. So yeah, it's awesome, man. Yeah, it is awesome. Okay. So I'm going to get this information over to you guys. Keep an eye out on the Patreon. All right. And I will see you guys at around 12:30. All right. I'll be notifying you guys 15 minutes beforehand. So happy hunting, guys. And remember, yeah, if you're taking any trades, remember to pay yourself. The idea is to grow the account. All right. There's no victory in seeing how long you can hold a trade for. All right. It's different if you're building a position. Like for me, I'm holding this dollar yen trade. All right. I'm understanding of a cycle that's going to come into play. All right. That's what I'm prepared to do. That's part of the strategy of what I'm applying to dollar yen. If I'm scalping, it's a different story. I'm in and I'm out. Okay. Remember this discussion that I had with you guys about timing your trades. If you're not in a profit within, 2 hours, the golden rule of 2 hours, when it comes to scalping, if you haven't realized the return on your trade within 10 minutes, cut the trade, start again. You have to get used to developing the habit of impulsively cutting your trade. All right. Get good at losing. And when I say get good at losing, I'm talking about cutting your losses so quick. Okay. To the point where it doesn't even do anything to your account, because when you do come correctly when you do get the right trade and it pays, all those losses are literally nothing. Okay. So have a wonderful, I'm really good at losing. All right. And guys, catch you guys in a bit. I'm going to be leaving the chat right now. Stay safe, guys. Mad love.